I expect some volatility here. We should expect that, but we should also expect a move higher. Now, taking it one step further, we've got the predicted short, medium, and long-term differences on this pound dollar. The medium-term and the short-term predicted differences are again used as an overbought and oversold signal. Here we have the predicted short and medium-term indicators suggesting that it's overbought. However, if we look at this dark blue line right here coming in, we can see that it's just now crossing above that zero line. With it crossing just above that zero line, it's suggesting that it's not, in the longer term indicator, we have a trend forming here. It's not oversold and it's not overbought. It's actually at just about trend ready levels. So taking it one step further, because again, I like to keep my charts as clean as I possibly can. I do not have, I never put the neural index up on my chart because I have it here on my daily report. It's very clean the way this is set up. Again, an excellent tool from Vantage Point that they have a daily report that puts everything right in front of me. Now, when I look at this, I've got the neural index up on pound dollar. We can see here that these predicted short, medium, and long-term differences are turning aggressively positive. We've gone from 27 to 67. We've gone from 35 to 74. And this key one right here, this predicted long-term differences, have gone from negative 72 to positive 25. So right now, the predicted short, medium, and long-term differences, the neural index, everything is basically lining up, saying this thing is getting ready for a move higher. So again, as a recommended trade today, we're in a shorter time frame of trading. The presentation is only 20 minutes to a half an hour long, but to do the deeper analysis on this, again, looking at not just the short-term stuff, we absolutely have to look at the medium and the long term. Now, potential problems here to this trade, what I'm going to point out is these equity markets. The equity markets, the pound dollar has a huge correlation to the equities, and by equities I mean global equities, not single market equities like the FTSE in Britain or the S&P 500 or the Nikkei. I mean all of them. So all of these equities, if they're moving higher, then again, pound dollar is likely to follow that higher. If these equities are aggressively moving lower, then pound dollar loses its strength. This is very similar to what happens in some of these other currency pairs, Euro US, Australia US, highly correlated to not just the commodities, but as of late, of the last year, it's been highly correlated to the equity markets. So right now we can see our pound dollar trade is starting to progress here. I would have loved to have got into this trade, guys, a little lower down around it. You can see that this pending order, excuse me, that's pound franc, but that's another trade we'll discuss, is I'm looking at, I would have liked to have, I've waited as long as I possibly could. I've waited since last night for the pound dollar to pull back to one of my recommended areas, and it didn't. Now, the recommended areas that I'm watching are 145.68, 145.21, and now we have this an interesting rate here is 146.15, which is the 18-day predicted moving average. So if we look at this, 146.15 has represented very strong resistance over the last actually over the last month. So we can see here that we've got a dip down to 145.85. That's the lowest we've got today, but we've hit 147.72. So if we're looking, again, if we go back into our daily report, 147.72 is where the market's actually hit today. And, you know, we've got a predicted high of 147.20, 145.20. So another thing that I want to point out when using the daily report like this, we've hit a higher high and a higher low based on the predicted high and the predicted low. Along with these differences, this is all a leading indicator here that the market is getting bullish on the pound. Now, another indication of that is what's happening in the cross pairs. The pound franc, you can see here these massive profits we booked, 443 pips on the one trade, 442 on the other. This is again suggesting that British pound is strong across the board right now. Now, another one here, I'm not sure if I have it up here that we can see it, but another one is Euro Great Britain. Euro Great Britain has gone from the 90 level all the way into the 83. Now, a question probably would be, in this case, is what do these have to do with pound dollar? Well, they have everything to do with pound dollar. The cross pairs can only be traded against the pound US dollar. So when Euro Great Britain gets traded, the first thing that has to happen is Great Britain US gets traded, and then Euro US gets traded, and it's a cross pair, so it's synthetic. It's important that everybody understand that and see what's going on, because again, these cross pairs can heavily influence the major pair as to excuse me, what the next potential direction the pound could go in. So if Great Britain US comes under pressure and starts pushing higher, if pound franc starts pushing aggressively lower, then this could negatively affect Great Britain US, causing it to artificially lower. Now, right now, we don't see that happen. We've got 14 pips booked on this. We're up $42 now. We've entered in, again, this trade is at 146.18. Now, looking at some of these other positions we've had this position since May the 12th, not quite a month. We booked 306 pips on the US CAD. So let's have a closer look at this. What I'm going to do for training purposes here is I have 308 pips on this. So what I'm going to do is I'm going to go ahead and close this trade out, because it's a very good trade. At one point, this trade was up almost twice that when it went up to 108. You know, not too long ago, if you remember in this trade, we entered it at the 101.62 under live trading conditions. But US Canada right now, very mixed picture. But let's go in here and have a look, because this is primary trading time for the US CAD pair. So there is some opportunity. Now, looking at this with the triple EMA crossover on the US Canadian pair, the reason I have this up is because I want to identify the major levels of support and resistance, whatever they may be. So what I've got here is I've got a very mixed bag, but there's right now, in my opinion, the bias on US CAD is to the downside. That's why I've closed that long position out. So what we have here is we have some three critical levels: 105.14, 105.26, and 104.55, with a very mixed picture on the predicted differences. However, if we look at the predicted MACD and the predicted true strength indicator, what I'm seeing here is this predicted MACD is crossed over to the downside. This potentially could be a leading indicator that this thing is getting ready to move lower. Now, things that are going to influence US CAD, two main things: equities and crude oil. Gold, not so much. Gold was a big factor a month or two ago, you know, or 6 months ago, but movements in gold have had very little, I wouldn't say very little correlation, but a lot less correlation to the US CAD, and more specifically to the Canadian dollar. Now, point of concern here is that Canada raised interest rates yesterday. They're the only country that's done that recently. So my concern with this is usually a currency is its strongest prior to an interest rate. After the interest rate, it usually sells off. Now, in this particular case, I think there's another factor here, which is crude oil. Crude oil, I've had out for a buy now for about a week and a half. It's been moving up and down. I've suggested the 72 to 71 area is going to hold, and that we start getting back into buy positions on the crude. Well, if that actually is accurate and crude starts moving higher, then what we're likely to see is the US CAD push lower, and Canada's strength is going to continue, because Canada did raise the rates yesterday, but the statement was certainly not bullish for any more interest rates